latest flood of Q1 earnings has come in. Earnings growth has been solid so far this season. Corporations continue to print big profits, according to the data. Our research director, Shiraz Mian, here now with me to bring us all up to date on the goings on. Shiraz, with Q1 earnings largely exceeding expectations, what is this earnings growth saying about our economy?
It's very good, Terry. The general takeaway from all of these earnings results, and we are heading into the final stage, Terry, which is more centered on the conventional retailers. But the overall unmistakable takeaway from the Q1 earnings season has been that the economic outlook is stable, that households and businesses are continuing to spend, and these companies are able to navigate an otherwise noisy and challenging environment with impressive results, as you rightly noted. Yeah.
So the big tech stocks have carried the S&P 500 to record highs recently. We've heard from most of the Mag 7 companies. What did their results say as far as sustainability of the stock rally? And is big tech doing all the heavy lifting right now?
So yes, the big tech is doing a lot of the heavy lifting. Uh, these companies aren't just big because investors are excited or hopeful for future growth. These companies are generating a ton of growth at present as well, and they're an ever growing share of the index as a whole. But on the whole, Terry, even beyond the big tech, the earnings picture is very impressive from the get go when the banks and the financials reported to consumers and staples and industrials and materials. The impressive part about the what we saw in Q1 results and what's expected for this year as a whole is the breadth of the stable and steadily improving outlook. So it's not just the big tech. Uh, it's all around, and it's very impressive.
Energy super stocks like Exxon, Chevron, BP, and others have also reported up to now. What kind of read did they provide, if any, on the impact of the Iran war on the energy market?
So as we all understand, Terry, these companies, the Exxon, the Chevron, the Shell, BP, and also the service companies, uh, they are the direct beneficiaries uh, of uh, of the spike in energy prices. Um, some of these companies that have production in the region that they can't access or monetize were partly affected and will be affected in Q2 as well. But the negative effect of that was more than offset by the gains as a result of high commodity prices. And in fact, energy is one of those sectors that at the start of the year was the only sector that was expected to have a modest decline in earnings this year. I'm talking about 2026 as a whole. And now, energy, as you can imagine, is expected to have very strong earnings growth as well. So all 16, and that goes on to the breadth comment that I was referencing earlier.
Yeah, along those lines, let's recap the scorecard and see what it actually shows on the breadth of this earnings season.
Sure. So we now have 90.8% of the S&P 500 companies. That's 454 of the 500 S&P 500 companies that have reported results. Earnings are up 21.3%. Revenues are up 10.4%. 79.5% are beating EPS estimates. 78.4% are beating revenue estimates, and these are better results in terms of the growth rates, in terms of the beat percentages for these 454 relative to other recent periods. So, as I was saying earlier, a very impressive showing.
And what has the corporate commentary shown so far?
So there have been pockets where companies are struggling, and we have all we have all been familiar with like the likes of Whirlpool and others uh, that not only reported bad results but also provided negative guidance. On the whole, Terry, um, the commentary from management about trends in the underlying industries and businesses to which they belong has been positive and reassuring. More companies are guiding higher. More companies are saying favorable and reassuring things about trends in their businesses than are saying otherwise. And we are seeing the effect of that favorable commentary in the revisions trend for Q2 and beyond.
How are the consumer companies specifically holding up during this Iran war, especially the retailers, because we're going to be hearing them report soon?
That's right. Yeah. So that's a big question mark. My own sense is that in the aggregate, the numbers will be okay. We have had for the last couple of years this bottom end of the income distribution really stressed, and I think we all can intuitively appreciate that that bottom end of the income distribution is even more stressed. Uh, I would say these companies will be cautious in their commentary about business trends. I think they'll be cautious about their outlook too, because the headwinds now is not just depressed demand from this lower income slice of their consumers, uh, but the high fuel costs are also likely having a negative impact on their margins through freight and distribution and transportation. So I would suspect, Terry, a relatively cautious commentary from the companies that are reporting in the days ahead.
What did you say? I think you said earnings growth. You put a number on it. What did you say it's tracking at right now?
So for the companies that have reported already, uh, it's 21% earnings growth, a material improvement. These same 454 companies, the average were about 12 to 14% over the last 4 to 6 quarters. So a significant acceleration, and there is a clear, notable acceleration on the revenue side as well.
Last week, I believe you wrote that record earnings are expected for Q1. The data shows this Q1 earnings season is on pace to be one of the S&P's strongest in 20 years, I believe. But given what we're seeing now, are we looking at a low bar being overtaken or a new higher bar being set?
I think a new higher bar, Terry. You would recall in the run up to the this earnings season, we were constantly spotlighting the revisions trend for Q1 estimates, and it was consistently positive. And so uh, uh, the way companies have traditionally set the bar too low is that as the quarter gets underway, like we are in Q2, for example, right now, uh, as the quarter gets underway, estimates come down. And then it becomes easier for management teams to jump through them. We did not see that for Q1. So uh, the estimates were fair at a minimum, and these companies comfortably beat them and the growth is significantly higher than what we were projecting before this earnings season start. So yes, it's an all-time quarterly record. We have seen a number of these over the last couple of years, but typically Q4 is the highest grossing quarter after 4 quarters in a calendar year. For Q1 to show such big numbers, we haven't seen in a long time.
What do you see happening to the estimates going forward?
So that's the impressive part, Terry. This isn't something new that we are starting to see that as a result of these Q1 results. We have been seeing this over the last few quarters as well. Some sectors have consistently been enjoying positive estimate revisions. You mentioned tech, that tech was holding, carrying a big part of the burden for the market. But the positive revisions trend has expanded beyond tech, and energy is another, which for obvious reasons is enjoying positive estimate revisions. But we have materials, we have industrials. So not just in the aggregate, but at the internal level too, the revisions trend is positive, both for the current quarter Q2 as well as for full year 2026.
All right. Want to remind our listeners that they can always check out your written commentary, changes a couple of times a week, on the homepage of Zacks.com. With Shiraz Mian, I'm Terry Ruffalo. You might want to check out this free book, Finding Number One Stocks. It's a 300-page hardcover where Zacks Executive Vice President Kevin Matras reveals almost every stock-picking secret he's learned from the system that since 1988 has more than doubled the average yearly gain of the S&P 500. Learn more at Zacks.com/promo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.